We're going to have another great interview for you today. My guest is Frank Holmes of US Global Investors. We're going to ask Frank his thoughts on the volatility we're seeing in the gold market, the discrepancy between gold stocks and the price of gold, and of course, we'll ask him his forecast for gold and silver. Frank, thank you for joining me today.
It's great to be here.
All right, Frank, let's talk about the volatility that we're seeing in the gold market. Last week we were down $100. Today, as we're speaking, we're up $50. Is this normal? Should we embrace it? What do we do with it?
Well, the volatility really hasn't changed that much over the past 10 years. Over any 12-month trading period, it's a non-event for gold to go plus or minus 15%. I think that's a real factor, except for it shows up as being much more significant because the price of the commodity is higher. So let's say it has a quick short-term correction of 10%. 10% of $1,000 is only 100. All of a sudden now it's $180, and that frightens people, confusing percentage change versus the dollar amount. And there are factors behind that. There's such a fear trade right now that's taking place, and it coupled with Ramadan came early this year at the beginning of August, which is the sort of starts the seasonal buying for gold, and then we're going to have a season of lights with India, Diwali, and then we're going to have Christmas and then Chinese New Year. So within that, we have some rotational difference on seasonality, but this fear trade of Europe, coupled with the fear trade in America, is exaggerated. This price, have you seen investors dump all stocks indiscriminately, not very discerning, and gold stocks get coupled in with all stocks when money was moving into bullion. And I think that's where we start to see this separation between gold and gold stocks. But the other part that's now making gold most interesting is Chavez, seeing his buddies like Gaddafi go under, doesn't want to have his assets in another country. He's taking delivery of his gold. And that means that the fact that we have gold spiking short term relative to the forward curve means that there's a shortage of actual gold bullion. So that's very bullish for the long-term picture for gold.
Okay, Frank, let's stick to that topic of gold stocks for a second. In your latest commentary for Kitco, you write about the discrepancy between the price of gold and gold stocks. And that's a question I get often from readers is why are gold stocks not performing as well as the price of gold?
It's happened before. We saw when oil went to 147, the gold didn't run as fast, even though gold was going to all-time highs, wasn't percentage change as fast as oil was in '08. So the gold stocks started to underperform because of margin compression. The big factors that make these stocks go out of sync with the commodity is currency swings of where the country they're producing, such as, say, South Africa. If the rand starts to appreciate faster than the price of gold, South African gold stocks far underperform North American gold stocks. So it's important to recognize these other factors that come in, and the biggest component of expenses outside of the currency play relative to the gold and to the dollar is energy. So right now, gold stocks are screaming by because energy prices are low relative to the movement in gold. You're going to see top line revenue growth of over 40% for these gold stocks, and that should translate into big earnings. And when you compare that to the whole universe of the S&P 500, I think that all of a sudden you're going to see money flow into the gold stocks.
Frank, you speak often about this fear factor in Europe and the fear factor in the US. Let's talk a little bit about the current situation in the US right now. Do you think QE3 will come around come September?
They have to figure something out because let's go back on the sort of comparing Obama to Clinton, same political party, but different policies. And President Clinton did raise taxes in the 90s, but he did something that's much more profound, and that is he deregulated. And when you look at a tax, when you increase the tax on consumers, you affect consumption. When you increase the tax corporately, it's a linear line. It's a straight line, and it has an impact on capex for corporations. When you put on all these new regulations, it's a nonlinear math formula. It's always greater than what you expect. So when we go back to the 90s, the deregulation of telecommunications, the internet, deregulation of the financials, unleashed tremendous wealth. So raising taxes by, say, 10%, but you're seeing your wealth go up 5 times that, that was a non-event. What we're seeing today is this administration is saying we want to raise taxes and we're going to push down your throat many more regulations in every form of your life. That is all of a sudden creating a disruption in equity markets and confidence, and that therefore the government's not going to be able to get job creation. They're going to then devalue the currency. All these factors turn around and create a negative sentiment, which makes it bullish for gold. I don't see that going away, and I don't see much of a change over the next 3 months with regard to that fear trade for gold. But what's more important, and just coming back from Asia last week, is it's still strong economic growth. And if you have rising GDP in China at 9% personal GDP per capita, and you have a cultural affinity to gold, that love trade is still intact in these emerging countries.
It just seems that the US can't catch a break, Frank. US consumer confidence coming out earlier this week at all time lows. Jobs data coming out today, flat. Where's the hope, Frank?
It's Bob Hope. Uh, so I think that the hope is that gold stocks are going to deliver spectacular results. And what you're seeing with many of the gold stocks that compete with the bullion ETF, they're becoming more disciplined in paying dividends, and they're increasing their dividends. There's lots of empirical research that shows that companies that have growth in revenue and increasing their dividends outperform. If I just look at the S&P 500, those stocks that have been rising dividends and rising revenue far outperform the S&P 500. Now gold stocks are going to become that next vehicle.
So, Frank, are you buying, selling physical gold now?
Yes, we've sold a lot of our bullion. We've had in the portfolio to turn around and buy gold stock.
So, Frank, what's your advice to investors right now?
Investors right now is don't be discouraged. And it's interesting that at the gold conferences in Vancouver, even 6 months ago, the crowds were substantially less than when gold was $500 an ounce. So it is just there's a lack of confidence in the politicians, and there's much more in their rhetoric is going to go after the rich in the U.S. And that's bizarre because 3% of the population pay 50% of all income taxes in America, and 50% of tax filers pay nothing. But you're now going to go after them and create this class war. This is just a lack of confidence in the leadership. So if Obama turns around and just has hope for the country, not just for himself, and the same thing takes place in Europe, when politicians start to really have a sermon on the amount of hope, then I think you'll get a change in confidence. Because when you look at America, exclude gold, or the S&P 1500 biggest companies, 700 of them have revenue growing at more than 10%. They have very strong balance sheets. They're paying dividends, which are greater than the 10-year government note. So I think that there's a schism that's taking place, and those investors are selling stocks to turn around and buy bank CDs offering less than 1%, when you can get great companies that pay more than that, and gold stocks that pay more than that with upside. They're the ones that are going to be in a bubble.
Frank, what's your short-term forecast for gold?
Well, gold's up mathematically. I always like to talk about this math of the markets. It's up over 30% over the past 12 months. So there's a high probability of a 10% correction and up to 15% correction from the highs. So if we got gold down to 1,1500, I'd be actually a happier camper. And then I think it goes and charges up to 2,200.
Are we looking at a 3-month timeline for that correction?
I don't know. I just know that mathematically we could get a correction here.
Frank, can we get some of your thoughts on silver? People have been telling me I'm neglecting the metal. I still have love for it. What are your thoughts on it?
Well, I always tell people that they should also buy a gold coin and then buy a gold stock, and they should buy 10 silver coins before they buy a silver stock. And I think that that's just a key point in that psychology, that if you're going to be looking at these, you should also own the commodity itself. Silver on a year-over-year basis is up substantially more than gold. So people get too short-minded. And earlier this year in April, silver relative to gold was up 4 standard deviations. I mean, it just mathematically, it was due for a big correction. It's gotten it. And it's going to get back in line to the gold-silver ratio, the long-term ratio. And I think it'll start to move more in the sympathy of what price of gold is. So don't be bearish on the sentiment, the emotions of the market right now. Just take a look at those silver stocks, which are producing much more revenue per ton of rock than many of the gold stocks. And that's something when you're looking at these companies, you want to take a look at what is that revenue per share potential, and that is what is the revenue per ton of rock they move. So I don't think it bears well that to be so bearish on all silver stocks or silver.
Finally, Frank, next week on September 6th, you will be taking part in a special web seminar along with the World Gold Council called A Case for Investing in Gold. Why should people register? What can they expect to hear during this seminar?
Well, as you know, the World Gold Council does a great job in tracking jewelry demand around the world, and they also have an excellent department that does institutional presentations of educating of what's taking place in the market for institutions and the power for diversification. We like it because it's a third party from us, because we have a product such as gold funds that we market, and just to give the insight of the value drivers to gold, it's not just the fear trade that's driving gold, it's also the love trade. They're going to give much more hardcore fundamentals to support that thesis that we have.
All right, Frank, thank you so much for joining us today.
Thank you.
And thank you for watching. You can email me your comments and questions at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.